What's up, guys? Bitcoin has reached its target level that we've been targeting since last week, Friday. And now the big question, of course, is how will it continue? Is the top in for this rally? What's next? And what exactly needs to happen for this rally to continue? Guys, I'm Pat. This is Crypto Unhyped, where we focus on the data, not the drama. And I will get into all of it. I will get into all the key levels for Bitcoin, what I think will happen, how I'm approaching these markets. And I will then continue to demystify a lot of stuff that I get a lot of questions about. A lot of you guys seem to be confused about the dynamics between liquidity, about open interest and spot action and so on, and how all this combines into your decisions for your trades, how smart money enters the market, how smart money exits the market, and so on. I will get into all of it. So this is going to be a good one, guys, and make sure to stick around till the end of the video because it really is going to be a masterclass on market dynamics. Right, guys, before I get into it, of course, I got to mention none of this is financial advice, purely for educational purposes and entertainment purposes, of course, as well, hopefully. And yeah, guys, nice to have you here. And let's get into the charts now. Today, we're not going to cover any news. The only thing I want to quickly look at is, of course, we've been looking at the Tokyo CPI coming out on, when was it? Yeah, on Thursday during our Thanksgiving dinner. And I told you guys that this could cause a bit of a big wick to the downside if we get bad reports from the inflation in Japan. But our friends over in Japan got some good news, therefore did not proceed to sell their Bitcoin. But nonetheless, of course, yesterday we had a strong rejection at that key level that we've been looking at here since last Friday, since we printed that massive candle on the daily chart. So let's get over to the charts now and see exactly what's going on for Bitcoin today and what I'm expecting here for the next few days. Right, guys, let's do it. Leave the weekly chart completely out of this one. We keep it for tomorrow on the weekly close. But the key thing is right now that we found here the underside test on the daily chart of the dynamic previous support line here, where we see, of course, that we've been trading in this falling wedge since our current all-time high, lost the dynamic support, fell below it, and now got the underside test of it. That is, of course, in combination with a lot of other stuff that we saw on the 4-hourly chart, where we've been targeting that area from, where we found an entry for this trade to that area as well. So here we see a very strong cluster. We see the Fibonacci retracement, where we're retracing the downtrend here from this very vital pivot point for Bitcoin, which I'll get into in a second. So from there we had to drop down, and then we see that there we reached the 50 on that Fibonacci retracement, the entry level for the high probability area, the 21 EMA, and of course, once again here, the dynamic support line, which is now, of course, a dynamic resistance line. So guys, this is what's happening here on the daily chart. And then if we look at volume, right, guys, we spoke about this big volume bar right down here and how, of course, in the chart here, it looks bearish because, of course, it's purple, as my bearish candles are purple and the volume bar is the same. But if we look at the price action in this candle, you can see that the bulls clearly won the battle here on that day in this candle. Bears tried to drag the price low, but bulls managed to form a very strong bullish reversal pattern here. Not on its own, of course. We always need to follow up candle to confirm it, which we got then, a second hammer, a smaller hammer, showing that there's less conviction by the bears to try and drag the price lower again. And then that got followed up by a bullish candle, and that formed a very nice reversal pattern here. And here we had it marked here with the circles. I didn't just draw them up. If you watched the previous streams, then you know that that has been our target area here all along. Here we also have a big cluster on the Fibonacci retracement just below there, where we've been trading on the 4-hourly chart basically the whole day yesterday until we reached our target there in the $93,000 range. And there you can see we have a strong alignment here between the 23.6 on the Fibonacci retracement, where we're retracing the entire downtrend, and then this last leg here. This last leg is very important here on the Fibonacci retracement because the top of it here, if you look at this refilled line here that you can see, that really marks the pivot point on the daily chart for Bitcoin to flip bullish again. By definition, what we want to see is, of course, to confirm a trend reversal is to break above the prior high in a downtrend to then turn bullish from a downtrend into an uptrend again. And yeah, by definition, we want to get above there. By definition, a chart also turns bullish if we're back above the 200 SMA on that chart, the 200 moving average, and that lines up perfectly with that pivot point there. So a clear close here above $106,000, almost on the cent, would give us clear indication that Bitcoin is going bullish. And then going back up here to test the 8-year resistance. Of course, we're a long way away from that, and I always tell you guys, you got to be ready for both directions and both scenarios that are on the table. We spoke about the scenarios a bunch of times here. If you want to look into them again, here I have a post over on X where I always share short-term updates and a lot of stuff when I don't have time to stream and post videos. So here you can see it. November 25th, I retweeted it. The original one was on November 21st. And there I told you guys that from that current area where we still were moving downwards without any strong indication that we have any reversal potential, I gave you the optimist, the realist, and the pessimist scenario here for Bitcoin in the coming weeks and months. So go check it out. It's a thread with a bunch of tweets below it, and there I explain you exactly which each scenario is for me. So guys, now let's get back into the charts here. And there we see that that's exactly how it played out so far. So obviously, if we can now here on a daily reclaim the prior support of the falling wedge and also the 21 EMA, then we have a strong, sorry, the 50 EMAs, guys. This is the 50 EMA here on the daily chart. Let me just confirm that actually. It's the 21 EMA. Sorry, I'm talking out of my ass right now. Of course, it's we're looking at different time frames, and I will get into the indicators on the 4-hourly chart as well. So the 21 EMA, we want to cross that, and then we have a shot here to get the underside test of that key range, where of course we want to break the pivot point in alignment with the 200 EMA, and that is here also in alignment with the resistance, the dynamic resistance from the falling wedge pattern. So there you see the other circle, that key area here, and that also puts us above the 78.6 on the Fibonacci retracement. Then very strong sign then, of course, because that shows that the prevailing trend is weakening, and then it becomes massive here if we can reclaim 101,000 roughly as support again. And you can see here we've been closing on that line here exactly for basically 4 days straight before we then broke down from it. Of course, we had a bit of a trap here first and then came down from there. So reclaiming that, very strong, breaking above it, even stronger, and a strong indication that we're turning things around here on a larger scale. On a smaller scale, we're looking for exactly the same thing. So let's go down to the 4-hourly chart now. And there we can see now that we reached our target area, right? This is the exact area that we've been speaking about here since we put in the bottom here last week, Friday. So why is this so important? We just looked at the dynamics on the, or the market structure on the daily chart, where of course we fell out of a downtrend and are looking to reverse it by getting above that pivot point. That is the exact pivot point here on the 4-hourly chart. Of course, we have trends within trends always in the charts, and this is the broader one. You can see the falling wedge here from where we're testing the underside here right now. This exact falling wedge that we saw on the daily chart, and there we're getting the underside test in combination with a bunch of stuff here on the 4-hourly chart. So if we look at it from a horizontal perspective, we want to clear the prior high in the downtrend. Here we see we have a very clear downtrend here locally, and the last significant high here was right at that point. And I've been telling you guys for weeks straight now that the exact number that we want to get above here is right around 92,400 bucks. You can see the riffled line there, and you can see how the price closed almost on the cent exactly below there after getting the underside test from the dynamic support line. Now, of course, logical support below us here, you can see very clearly that we've been trading here in a local uptrend, printing higher highs and higher lows. But nonetheless, to flip bullish here again, we need to break the prior high in the downtrend. So by definition, then that is a trend reversal. Here we can see now that we have below us the 50 EMA here on the 4-hourly chart. It is the 50 EMA in alignment with the dynamic support line here of that current uptrend. And also if we retrace from the low to the high now, this current rally here, there we see that we have the 23.6 all lining up in that area right around $90,000. So here, key line to hold. Otherwise, of course, we can expect a retest of the breakout level. So the breakout level is the same thing that we saw previously on the daily chart here. You can see here support, prior support, then turned into resistance. We got the underside test of the range with a rejection, and then eventually here with this candle broke above it. Now we get to the volume part in a second when I break down the market dynamics for you guys. But the key thing is here that we reclaimed this here. This was massive resistance. There was step one here to reclaim support and to have a shot at reversing this trend. Step two is of course now starting to close back above 92,400 bucks here. And then we would break the last prior high here in this downtrend and by definition flip bullish. Then of course we find resistance above us here right at $97,000 where we see the 200 moving average here in on the 4-hourly chart. There we can expect some resistance in the area between $97,000 to $100,000, 97, 98. There's a lot of stuff lining up. And there we can really expect the next resistance coming in before we then continue up towards the $100,000 to $101,000 range, where of course it becomes really interesting. I get to all those targets tomorrow on my weekly close video when I also cover the weekly chart, and then we look at all the key resistance above us that really would flip Bitcoin bullish long term again here and put us back into officially back into a bull market, right? If we look at the largest structure on the monthly chart, for example, then we are still bullish, still clearly in a trend where we're printing higher highs and higher lows, but all the smaller time frames below it, of course, are bearish, and therefore we need to look at the key levels now to flip bullish again. So this is it here, 92,430 bucks on a 4-hourly closing basis with confirmation and volume confirmation. Very important to turn it around here. To the downside then, of course, if we get a retest of the breakout level here right at $89,000, then, or just below there, you can see 88,750 bucks more or less here was the line. And there we see also the 38.2 on the Fibonacci retracement. So this is the line in the sand to continue printing higher lows here on a smaller scale and to get another bounce from there, hopefully to test this key area here at 92,400 again. So these are the main levels you need to look out for short term now. And now I want to cover something really interesting for you guys. So you guys probably all know those heat maps. Everyone is posting liquidation heat maps, for example, and how I showed you the other day as well, how this aligned perfectly here with our price levels in the charts. The way I want to explain it to you guys is let's look at it as a game of Minesweeper, or let's make it even more radical and look at it as actual mines in a minefield. If you look at these liquidation levels, right, then you see those are the mines in the minefield. Whenever the price hits those levels, it means that leveraged positions get liquidated. That's where the stop losses are located here, to the downside, obviously, for long positions, and to the upside for short positions. So when the price reaches those levels, then these trades that are either in a long or in a short position gets liquidated. And of course, if there's high open interest and we reach a level like that, so open interest is trades that are leveraged, positions that are leveraged, then the price reactions from those levels is much stronger. And if we reach a liquidation level with really high open interest in the market, then usually the price reaction is huge. And when we have times like Thanksgiving and weekends like this after Thanksgiving, when really liquidity is at its lowest, so we see that volume, even though we had a breakout in the chart the other day here, you can see here where we broke that key resistance level, it really didn't come with massive volume. So that shows us that liquidity in the market is pretty low. And that whenever we reach a level like this, a liquidation level, liquidity is low, open interest is low, then we don't get such a huge explosion at those levels and price doesn't fall down as much. Of course, if open interest is massive at those levels, we touch those levels, the mine explodes and the price just plummets down again because there's nothing to pick us up. There's no liquidity in the market. To explain that even clearer, if you're in a minefield, like we said, and markets are closed, for example, there's no limit orders, stock markets are closed, Wall Street is not there, liquidity in the market is very low, then of course the blast from these explosions when we hit those liquidation levels can't be absorbed by any limit orders, and then the next logical limit orders are at very strong logical support levels. So if we would have gotten a reaction from here and there's really high open interest in the market, meaning there's a lot of leverage in the market, we reach that liquidation level, let's go back to the heat map here. You can see that was perfectly aligned with the level that we were looking to break. You see the price right here, 92,500 more or less. We're looking for closes above 92,400 roughly in the 4-hourly chart. We touched that point. That's exactly where we got the reaction from. But then if we look at open interest in the market, the leverage position here, you can see that since October 7th, it's been plummeting. So there's no leverage in the market. Therefore, the reaction we got at that level was minimal. But if the worst case scenario is really high open interest, low liquidity in the market, meaning markets are closed, there's no spot action going on, no limit orders positioned anywhere, then we have no orders to absorb a rejection at a certain level, and therefore the price can just shoot a massive wick down. That's what I was talking about here on an event like Thanksgiving, when we had CPI inflation numbers coming out of Japan, which of course play a strong role in the crypto markets. If they would have come out negative, then we could have seen a combination of meeting a liquidation level with a sell-off coming out of Japan due to bad inflation numbers. And then of course we could have seen a massive wick. And then when markets open on Monday again, and we see that all the bankers and everyone, they start picking up the Bitcoin that's been, all the positions have been liquidated, the price that dropped down to much lower levels at logical support. So then they have an opportunity to pick it up here again in the $88,000 range, or even lower in the $80,000 to $82,000 range. So that is really the most dangerous scenario for your positions, to be in a market where there's very low liquidity, very high open interest, and we're approaching a liquidation level. Then really at that liquidation level, you need to get out. Otherwise, it can get pretty ugly. And then you get a huge chance, obviously, likely to pick up Bitcoin or whatever asset you're looking at a much lower price. This here, what we're seeing right now actually is some of the purest price action that we can look for. This is what leverage traders are now waiting for. So we see that open interest is extremely low in the market right now. And that is, of course, because we're in a situation where we are still trending bearish, but we're trying to reverse the trend. And of course, markets have been closed. Yesterday, bonds have closed at 2 p.m. Eastern time. Wall Street has closed. Stock markets have closed at 1 p.m. Eastern time. The day before was Thanksgiving. Now we have the weekend. So, of course, a very, very dangerous time to have open interest, high open interest, leverage positions in the market. And that's why I told you already before Thanksgiving, the way I'm approaching this is by de-risking and by widening my stop losses to really not get affected by these flash sell-offs that can occur when a liquidation level gets met, right? So that's the way traders and smart money is approaching the market right now. And then if you see here that open interest is extremely low, that means that this price action that we see in the market right now is purely driven by spot action. So if you think about it as let's say it's a real estate market, right? You take money, you take your own money, you buy with cash, you buy a property, you can't be liquidated. That's your house. You have no debt with anybody. So this is what's happening here. People are buying Bitcoin. Investors are buying Bitcoin at a lower level. Potentially people that have been taking profits in the $100,000 to $126,000 range. And therefore, we have a very solid fundament that's building a floor right now. And what we want to see now for leverage traders to start entering the market again is to flip bullish in this chart. And therefore, this is the key level. From a liquidation perspective, from a price action perspective, we need to get back above here the 92.4 to 92,500 level, confirm it as support, and then you will see open interest picking up again. And there's a lot of traps in these times as well. That's why I always say it's better to wait for the retest. What happens oftentimes when such a critical level gets reclaimed as support is that open interest picks up really fast. We see smart money entering the market because they, of course, now have a strong fundament to enter the market. And then what happens? FOMO gets caused. FOMO investors, the not so smart money enters the market, and they have to place their stop losses due to leverage at a much higher point. So they often get flushed out by the smart money. They drag it back down to support, confirm it there to the confirmation level, the prior resistance that is now support, and then pick up leverage again, and then they flushed out all these other positions that entered too late, and then pick up their Bitcoin basically and re-enter. And that's why it's smart then to wait in scenarios like this for the retest when the price comes up, leverage enters the market, brings it down, then a lot of people enter on FOMO. That's when smart money pulls the plug again, price plummets, and you have a chance to pick it up at the prior resistance level on the retest. So that's a really safe play you can do. Otherwise, in moments like this, when we come out of very, very strong spot action, which means if we break this level now without open interest, that gives us a very solid floor here in the $92,000 area. And then it's safe to even enter on the breakout already, and then just set yourself a lower target to take profits and place and then potentially re-enter on the retest and aim at a higher price target from then on, because then you have a much stronger safety net with a second touch point on the previous resistance level, confirming it further as support. So these are the market dynamics, and this is how I'm looking at the market. I look at all these levels here. If we go into the larger time frame, let me just go over there. There's a video that I have planned for you guys. Let me just see where it is. Here we got it. Just a second. So here's a strategy video that I really want to get into with you guys. And there we also see here these price levels, the white circles, and these are all buy areas for me on the way down. And we spoke about it before, that's here currently a very logical support level to get a bounce from, to get an underside test. And that is what I'm going to get into with you guys tomorrow. We're going to look at this strategy. I'm going to show you exactly how, with a very simple but effective strategy, I have managed to more than double my Bitcoin position from last bear market into this bull market without much knowledge. You don't even need to have that much knowledge about price action and trading. You just need to have basic awareness of where the key levels are in the chart, and then you can utilize a system which takes the guessing and the gambling away of what a lot of beginners are doing. They're trying to time the top and trying to time the bottom, and then they burn themselves and often get stuck in their positions. So there's something really, really basic and really, really easy that you can use. Stop yapping. Well, dude, you can go somewhere else where people are doing this in silent, but you're probably one of those who doesn't want to learn about price action and just wants to know where the buy and sell button is, right? So no problem. You got a lot of channels of those. They will also give you a beautiful link on Bybit, how you can wreck yourself in these kind of market conditions. So go for it, man. Let's see. Yeah, my pleasure, man. Yeah, I didn't want to stream today, but I saw the price action. I saw that we met a key target that we've been speaking about for a week. So so I decided to go live. Also, I decided to likely do 6 live streams a week now and just do 1 video per week instead. And yeah, that might happen very soon, because to me it's just way more convenient, way more comfortable, and I think it's also way better to give you the charts and tell you exactly what's going on when the price action is taking place, rather than having to go through the recording period and having to edit all the content and so on. So yeah, guys, I hope you enjoyed this type of analysis, and let me know if you have any questions about the strategy that I just spoke about here. Not the strategy, but the dynamics as well in the market, because it can be complicated, of course, to understand how it works, the whole difference between spot action, between high open interest, low open interest, high liquidity, low liquidity, and then of course these kind of things like ETF inflows and ETF outflows, and when there's high liquidity in the market, why is it less dangerous? Why is it's an absolute mess. But I'm going to be focusing a lot more on this kind of stuff, and then just breaking down the Bitcoin price for you. Let's see. Why is it very profitable to sell old seed phrases through the Seed4KI project? I don't know. Probably profitable for scammers like you, but I have no idea. I don't even know what that means, man. Did you want animations and pictures? Yeah, I think he does. I think he wants to see rockets and moons and stuff like that. And dude, there's a lot of channels where you get this. So go over there and they will give you a buy and sell signal and tell you how you can deposit all your money on Bybit and how your money then will go to the moon. So there's plenty of that around here. But yeah, guys, that's it for me for today. I just wanted to cover the levels quickly, explain you a little bit how the price got to where it got currently through spot action. Really, we're waiting for leverage to pick up to really push the price higher again, and then tomorrow I'm going to cover the targets again on the higher time frames, such as the weekly chart here, and exactly look at what my play is currently, what I'm still waiting for, where I'm looking to exit the market completely, and at what levels I'm looking to re-enter for my long-term holding positions. Guys, this is going to be, like I said, it's going to be a 3-part or even 4-part series. In future, I will make designated videos on demands about it. Also, what we spoke about today, make it more visual for you with some graphics and statistics and everything. So I hope a lot of you guys get a better understanding of the market dynamics, how it works, when smart money enters and exits the markets, when price is driven by spot action, when price is driven by open interest, and also what the dangers are and what you need to look out for. Okay, let's see. Anything else in the chat? Nice video, thanks. My pleasure, man. I'll be back tomorrow, like I said, with the weekly close. Appreciate everyone new to the channel. Consider joining us here. Team Crypto Unhyped, just growing, just getting started. All you got to do is smash that subscribe button and all that good stuff down there. And yeah, I appreciate all the likes, all the comments. As you know, guys, the only engagement here on the channel for now or the only currency on this channel is engagement for now. I'm not pushing any links, any stuff here. So yeah, just like the videos, drop me a comment, and I guess I'm out of here. Enjoy your Saturday. I'm back tomorrow. And as always, happy trading.